What's up everybody, Tom here with another video. Today we'll be talking about the latest stock market news along with our technical analysis thoughts on the S&P 500, Nasdaq, Volatility Index, Apple, Tesla, and the US dollar. We'll also be talking about gold and silver in this video, so there's a lot to cover. So yesterday we saw the iPhone 12 release. That bought, buy the rumor, sell the fact again in Apple stock, with Apple stock declining over the day. We also saw the trend line getting reached and respected off the multi-year weekly trend line. So we'll be talking about that on the S&P 500. There's a lot to unpack here. Stay tuned. So as we like to do on this channel, let's have a look at what happened over the last 24 hours. Well, we just said Apple declined into the actual news event. We'll be talking about why that happened and what it means for the stock moving forward. Disney had a really great day, which is good because, of course, I'm a bit of a fan of that stock at the prices it's been recently. And then we've got things like banks doing relatively poorly, and there's a few reasons for that, but that doesn't mean that banks can be cut off yet from potential value investing once they break key resistances in the future. Just a quick reminder, if you haven't already subscribed, consider doing so. We had a great stream last night. We obviously got well over 500 members coming in, and it was awesome to see the community so excited about the live streams and the market. Into what happened yesterday at the close. So it was a bit of a bumpy ride for the Nasdaq. It was up, it was down, it was all around. It ended up basically flat, even with that decline in Apple. The S&P 500 and Dow, however, were down. They were down 0.62% and 0.55%. And when we look at the sector analysis, it becomes pretty clear why. Financials down pretty heavily, real estate down, energy down. We have industrials and, of course, also the materials sectors all doing fairly poorly, while the technology sector wasn't down that much for the day. I think that this really just shows us a standard kind of rotation out. There was nothing really too much notable here other than the banks. And overall, we're still moving very, very high off that inverse head and shoulders on the S&P 500 and possibly a little bit too fast. And if you stick around, we'll be going through why we think it could be a little bit too fast and we might be seeing a little bit of a corrective pullback during this move. S&P 500 put call ratios, what happened? Well, they hit almost the historical lows. Notice when it gets to this 0.6 level, we've usually seen a spike up in put call ratios. And this has often been the time where we do see corrective moves in the market. The lower amount of puts in the market generally means, of course, there's more calls out there, and Wall Street takes advantage of that bullish sentiment over the bearish sentiment. They always like to steal off somebody. When we look at the CBO market statistics yesterday, what do we see, guys? 2.04. This is up from a 1.2 reading the day before. So big increase in put opens yesterday from everyone in the market, and that makes it so that it's very difficult for the market to short off. It's when people less expect something to occur that it happens. If we take a look at the Apple event, why did Apple sell off? Well, firstly, it went up 6% on Monday, plus. It also was running into the event. But when you're announcing an event, and especially this one, where literally Apple's leaks were rife in terms of almost 97% of everything that was said in the leaks ended up being correct, we don't have a mass amount of euphoria coming off the event. We don't necessarily see anything new. We have the HomePod Mini, we have the new iPhone 12 and all of its different SKUs, but we don't have any other products. We don't have the AirTags that were meant to be coming out. We don't have any more information about those other sectors. And the thing is for Apple is while they're going to sell a lot of this phone, there's going to be demand for it, it needs to do a lot. It obviously needs to beat market expectations. So it was a classic case of hype in, and then retailers just sold it, lost commitment, and it went and touched a very nice support. And we talked about this during the live stream. So let's now talk about the VIX. What happened in the volatility index yesterday? Well, it held its 25 level. The market's still relatively high. It didn't fall off that much, yet the VIX has started boosting off this 25 support. Remember, we have strong resistance at 30 and strong support at 25. We're currently trading at a 26.2 handle, 26.1 on the VIX. And this is leading up for potentially more spikes of fear in the market and therefore the selling corrective event we were just talking about. The market moved up very quickly, but the VIX did not get through that 25. And that has me thinking instantaneously, something's a little bit wrong about the price action we saw Thursday, Friday into, of course, the Monday trade. It was very bullish, very aggressive, and is due for a smaller correction phase. If we paint the picture with the dollar index, I guess the dollar is really agreeing with that kind of assumption as well. Very strong bullish dollar. We had a bit of a laugh about this one in the chat last night. Obviously, Goldman Sachs just came out with an article right down here saying sell dollar, and then of course the dollar goes up. It's almost like always we can go the opposite of what they're saying. So the 93.40 wasn't even held. Now this is just a classic case of, while this is still an incredibly good technical level, double supports and resistance, it shows that when you've got aggressive market moving, you don't just necessarily sell this level blindly. What you want to do is you want to go into the smaller time frames and wait for the lightning bolt down. This is the game changer for many technical traders out there, using a smaller time frame to confirm a resistance or support zone at key levels. So we actually saw the dollar index go even further up. And if we look at the daily, it just tapped the 20 exponential moving average. This has always been a very important moving average from a support resistance side. We see it was initially support. It's probably going to be initially resistance here, but the dollar index remains trapped between these zones. And I was surprised it got above the 93.40 so easily, but it shows that people are a little bit concerned possibly. There's a bit of safe haven aspect here, and people are buying into most likely things like bonds, and they're also buying into, of course, dollar and buying into other safe havens. When we look at the US dollar's impacts on silver and gold, they were pretty severe. Silver came back down to our box price of around 24.30. It's now trading at 24.20. So right around where we expect buying pressure to come back in. It's another case of we need to see that smaller time frame change of trend to the upside, and then we're expecting silver to, of course, go to 26. If the US dollar continues to strengthen though, there could be some further downside risk here for silver, and it's certainly not out of the park yet. It's a zone to watch, a zone to have alerts for, and of course, if you do see that change of trend, it could be quite bullish for silver. But for now, it's sitting around the support zone and we need to see bullish intent. If we take a look at gold, gold was a little bit scary. So it went past the 1920. We've been talking about this 1920 close above for a little while. That was fairly bullish for gold, and it always would be. We had strong amounts of wick closes around here. If we go down to the 4 hour, you'll notice that we had a strong amount of body closes all around this 1920. We closed above that zone and then instantly now have found weakness. I think the only thing you can really do with gold right now is draw this little trend line here and say, well, if we can't hold it right now, it's probably going to go further short. And of course, if it gets through this previous low of around 1874, it's going to go back down to the 1850 and past 1850. Well, that's a whole different story. We'll cover on another day. If you're a bull on gold, well, we need it back above this 1930 area. We need to see it close above here and then hopefully continue on. But for now, gold is very, very tough. I would have hoped that when it got through that 1920, and we knew 1920 was going to be resistance initially, that it would have continued bulling. But the power of the US dollar move is just too much here for gold. We're back on the trend line. We need it to support this level right here, right now. Apple event, what happened? Well, we just talked about the Apple iPhone and what happened there, but what about the support that was reached? We mentioned this in the live channel last night. The 119, 120 zone acted as perfect support. We had a 20 exponential moving average underneath it, previous resistance over here on the left-hand side, and a very, very nice kind of little pickup there on the intraday trade. I don't blame people that picked up this zone. It certainly was a decent little sell-off. Basically, all of the initial hype really got taken out of the market, and then it came back down and touched this zone. Could there be further shorting for Apple? Certainly there could be. It could go back to the 116 where it'll hit a 50 and a 200 exponential moving average. There'll be a lot of market structure around this zone as well. So if it gets back down there, I'd see further buying pressure. And overall, I think that there is bullish sentiment here on Apple, and it does deserve to be relatively high. If it gets down to the 116 though, I think there's going to be buying pressure there from the bulls. Taking a quick look at Tesla, Tesla has been slow, uncharacteristically slow. This stock has not had the trade and the daily ranges that it has had recently. And this is because it's dying down in terms of the hype. But there are news events coming up. And remember, Tesla trades into news events. And when it breaks out, it often trades in a buy the rumor, sell the fact, similar to Apple, yeah? We have a 455 resistance here. Some people call this an ascending triangle. I'll call it that loosely, but this resistance of 455, if Tesla breaks out and closes above this zone, what do we know about Tesla? It's super bullish, it's super aggressive, and when it breaks, it doesn't just come back to the conservative. It generally has bulled very strongly off that level. Now, if you're taking traditional ranges, you'd take something like this, but for me, 520 seems like the profit target if it gets through. Why would that be? Well, that's just where it previously kind of tapped out. It's a nice round number level, and I don't think 500 is going to stop it. It doesn't seem like 500 stopped it that much last time, so why would it again? So the buy side here for Tesla is interesting at the 455, but also the 410 double support here. If it breaks and closes below that, it'd also be putting pressure on this little trend line through the bodies. At that point, what would we be seeing? Bearish intentions in the Tesla stock. And I think that the gap range here, if it got through that 410 and closed below, would be back to the 360s where it previously found support. So there could be a lot of selling pressure as well if it does not and it fails to get through the resistance over the next couple of weeks. There could be selling pressure under the 410, would really trigger back into the 360 here for this stock. Like any good technical analyst, the way that you need to trade it is understanding the stock itself. Tesla, crazy momentum stock. When things are happening, it moves to the next zone or the next gapping area. That's the way we trade it, and that's the way we need to understand it. So you don't want to buy any just general price. You generally want to buy the key psychological points that work into the momentum of the stock and the move overall. So guys, let's take a look now at the US 100 and of course US 500, the S&P. So the Nasdaq here, relatively bullish, in fact, extremely bullish off that key close area we discussed. Now, a few things I want to note about this. Go to the weekly here, and we'll see a very interesting candle. So a lot of people think this is an incredibly bearish candle, and it is. It's what's called a shooting star. Some people call it a pin bar. But what happened after that, similar to what happened over here, we did this in the weekly analysis, when it closed above this zone, it became an incredibly bullish event. This is the trap, and this is often what causes a slingshot. There's so many people selling with stop losses above here, and they often move their stop losses up, that the market bulls off this. It's effectively switched sentiment. And that's why I believe we got such a massive slingshot. We got it because there was so much trapping of shorters in the retail crowd and just in general. When this market closed above this wick, it all becomes on, especially with such a key resistance break. When we go down to things like a 4-hour, where to next for the Nasdaq? Well, I'm thinking Fibonacci, and that's usually what I do when we don't have clear levels of support or resistance. Obviously, we have that 11,600. It'd be great to see it come back down there and test it where resistance became support, but we may not see that. What we may see is that the market creates a little miniature head and shoulders on the smaller time frame and then shorts off back into the 38,250 area. Remember, we want to target this 38,250 area when it comes to Fibonacci. So that's my thought process there for the Nasdaq. Obviously, we break a new high, we close above that. We're going to go and test resistance highs at 12.4. That should become resistance, and I would expect selling pressure off that. Again, I'd be drawing the fib then to the 12.4 area, and again, looking for a 38,250 fib pullback. But for now, we're stuck in the range of course, looking for fib pullbacks back to 20 exponentials and back to some kind of normality to show us that this trend is not hyper euphoric, similar to last time, and won't have a crazy corrective crash. We want to just see a decline now into key Fibonacci levels. So let's talk about this really long-term trend line. So this trend line's been brought up. I'm sure you've all seen it by now. I know a lot of people are using it, and that's very valid and fair. This is a multi-year trend line. Some people draw it all the way through to the bottom. I'm just going to draw it through these peaks here, and that's the way I'm just going to create it. It's the same thing anyway. So we have multiple resistances. It was the catalyst for the sell-off last time. This is the weekly SPX. Remember, SPX is the key here, the real market, not the futures market. So we hit that level and we sold off from that zone. So that became the strong resistance zone. We also have found that while held it in a body phase last time around. So it's very interesting to see the SPX declining off that area. When we look at the SPX and the move that it's recently had, And what we've seen yesterday, we can see very, very far away from the 20 exponential moving average on the daily. If we go to the 4 hour, we've obviously had a decline, but we haven't yet hit the 3,500 zone. And that's the area that we do expect at least the market to pull back to, because that's a 3,500 and a 20 exponential moving average on the 4 hour. A normal pullback will at least see that level reached. If we take a fib again of the entire move and we think about what could be happening from that perspective, usually of an entire move, again, we usually see it back to the 38,250 fib. So that would be in between these zones. I'll let you draw it on your charts as well. And that's what we're looking for here on the S&P. If it makes a new high back to 3580, if not 3600, and then of course the exact same thing again, we'll be drawing out the Fibonacci, looking for the retracement to the 38,250 fib. So it's stuck in the middle of nowhere land. We are again in the inverse head and shoulders. We still haven't completed. We've seen good movement, but maybe a little bit too euphoric. And it's time to see what the market brings for us next. So if you've enjoyed this video today, please remember to, of course, subscribe, hit that alert button. Because the streams have been so amazing, we'll be doing Monday live streams every single time, unless there's a public holiday in the US, and then it'll be Tuesday. So come join us on the opening bells. Of course, subscribe to the community, and we'll see you in another video. Bye for now.